It has been just over 2 months since President Trump declared Liberation Day, and we've been on a roller coaster ride ever since. But what, if anything, have we learned up until now? Hello again. Thank you for joining me for this edition of Numbers Matter Shorts. And let's just start with the lead that I don't think the volatility is over. We are in the early innings of this thing. We've seen a lot of activity, the market trying to adjust, the stock market, the customer markets, and that kind of thing. And I think we're going to see some more because this thing looks like it has a lot of potential for risk. And when I talk about risk, I mean there's upside potential for risk. It means things could actually turn out better than we expect or that we can foresee at the moment. And things can also work out a lot worse. Things can go down from here. So too early to call. Are we going to go into recession, or are we just going to kind of consolidate at these levels and then take back off once we know what's going on? Anybody's guess at this point. I don't have a clear answer for that. But the market is trying to adjust. It is behaving. It is reacting. And a couple of things that indicate that to me. First, I want to update a graph I showed the very last time I had one of these videos. And that is the graph on the trade deficit. And so, as you can see, for the first 3 months of this year, in anticipation of tariffs, the trade deficit in goods, especially the imports, skyrocketed, jumped way up. And they went up so high, in fact, that it actually caused the overall GDP data to go negative. Imports are a subtraction in the GDP calculations. And so when they went up that high, it actually pushed the overall GDP number for the first quarter into negative territory, just barely into negative territory. And there were some other contributing factors pushing it down. But as far as the major things like consumer spending, which is about 2/3 of the overall economy, that did not go into negative territory. We are not in a recession, at least not yet, at least that I can see in the data. But imports surged, people buying ahead of the announced tariffs, stocking up in inventory, buying things. That pushed the GDP number down. As you can see, the number skyrocketed. In the last month, that number came down substantially, and that's the graph what I want to show you on the graph. Now, a couple of things. That was a huge drop in monthly trade deficit, good imports of goods. It's going in the right direction. We would expect that number to come down as tariffs are applied. We're not really into the full tariff regime yet. We don't really know how big the tariffs are going to be, and they haven't been on for very long. But that number's way down in the last month. That's the direction we wanted it to go. And what you want to see is imports down, trade deficit down, and manufacturing activity going up as domestic manufacturing ramps up to meet domestic need. We haven't seen that in the manufacturing data yet, at least not in most of the data sets so far. Manufacturing data still kind of under the cloud of uncertainty, not ramping up yet. So that's another area where there's going to be continued volatility, continued uncertainty. Look forward to getting more of that data later. But right now, imports are coming down in the direction you want. Now, one of the things that actually could push imports down is an unwanted factor, which is just a collapse in demand for all types of goods, not only imported goods, but domestically produced goods, that the economy then goes into recession. Consumers pull back on spending. That is not in the data at the moment, but certainly could happen. So what's going to happen next, we just have to wait and see. But right now, the imports data is going in the right direction. Analogous to that is the direction or the trend in the stock market. And you remember there was a huge decline in the stock market right after the tariff regime or right after Liberation Day was announced. That number now, that the stock market is all the way back up to positive for the year. It's not quite back up to the peak, but certainly trending in the right direction at the moment. Now, we know that can turn around very quickly. We know that's very reactive to any risks, positive or negative, in the economy. But right now, that's rebounded and is positive for the year. It's not past its peak. I can't say with certainty that we have resumed a bull market trend, but it's not in a bear market necessarily either. It's right now sort of in a range. It's a little bit below its all-time peak, up for the year, but still down a little bit from the peak. Could turn around from here and head back negative, head into a bear market, could continue upward in a bull market. I'm not going to try to predict that either, but that's what we see now, similar to the imports data. Looks like it's going in the right direction, but that doesn't necessarily mean that we're out of the woods yet and all systems are cleared. So what's going to clear this up? Better information about the trade situation. Trade talks are complicated. I've listened to some negotiations and reports to Congress on trade deals with certain countries. There's a lot of products. Trying to figure out what the fair amount for tariffs and charges should be, and then enforcement. Very difficult. So trade talks are complicated. That's not going to get settled immediately. Could take a long time. I do know, or I do believe, tariffs are here to stay. That's how President Trump intends to help fill the gap between revenues and shortfalls in his overall budget deficit. The big, beautiful bill that they're working on, huge deficit still, huge hole, and tariffs are going to help to fill that out. Going forward, what are the biggest risks? Well, some of the risks that we have been pushed to the back burner have nothing to do with tariffs. And I'm specifically thinking geopolitical risk like Russia and China, not just necessarily with trade, but also with the Taiwan situation. Those risks don't seem to be abating. In fact, the whole Russia-Ukraine thing could be have been kicked up a notch, as well as activity in the Middle East, not necessarily going in a positive direction. Those are all risks to the outlook. The other big risk, the budget deficit. I'm a deficit hawk. I don't like to see the direction it's going. Elon Musk criticized the budget very vociferously on his way out the door, and I agree with him. There's too much spending and not enough cutting. So those are the things we have to keep watching for. As always, I will continue to monitor this very closely and report back to you in a few weeks. Thank you again.